Welcome to the podcast and welcome to our year-end Monkey Business podcast recap and look forward. And without further ado, let's go right to Kevin with a crypto update and recap.
We're basically looking at what was the best of 2025, what was the worst of 2025. And for crypto, the best of 2025 was the very positive fundamental developments basically across the board in crypto. So in the US, the regulatory environment changed completely. We've talked about that. And the institutional adoption of crypto happened in a very big way. So everything that the crypto community basically, if you asked them what they wanted to see, they saw it in 2025. And so that's the best of it. The worst of 2025 was that despite all of those developments, the recent price action and performance in crypto have been absolutely terrible. So if you had told me at the beginning of the year, the beginning of 2025, there would have been stablecoin legislation passed in the US, that a crypto market structure bill would be close to finished. That's right now, both the Senate, Congress passed it, but the Senate's working on their form of this, and it's going to just clarify all the regulatory oversight of crypto and make it, frankly, easier for a lot of these crypto projects to get traction. That the SEC would cease fire on all their regulatory enforcement of the space, that institutional investors would be making substantial allocations to Bitcoin. And we talked about this, Abu Dhabi Sovereign Wealth Fund and Harvard's endowment, both in the third quarter of the year, increased their exposure to Bitcoin ETFs to 1% of their AUM, which is pretty substantial. And these are, the Abu Dhabi Sovereign Wealth Fund, Harvard Endowment, these are the Pied Pipers of their space, of the sovereign wealth funds and of the endowment space. So also, almost every Wall Street firm is rapidly experimenting with various tokenization projects. NASDAQ, as of now, is up 21% on the year. The Fed and the People's Bank of China are in easing mode, and gold has spiked 70%. If you told me on January 1st that all of that was going to happen this year, then I would have predicted with very high conviction that Bitcoin would be at least $150,000 right now, could easily be $200,000, and the rest of the crypto space would be much higher as well.
Oh,
And
also, Kevin, sorry to interrupt so also we know I think it was last week or the week before we were talking about, so even the FDIC is starting to get involved with the banks, federally chartered banks and stablecoin. So that just another, and that I'm assuming that would be should have been a pretty big bonus for crypto as well.
Absolutely. And registered investment advisors in the US are, every week there's a new one that is finally allowing their advisors to recommend crypto to their clients. So just all very, very positive stuff. But, on October 10th, Bitcoin hit its all-time high, about $126,000. Things look good. But since then, it's just been down across the board. And it's been a miserable 3 months for crypto. And so as a result, year to date right now, Bitcoin is down 5%. Ethereum, the second biggest token, down 11%. Solana, another very significant project, down 35%. The sector of the decentralized finance space, which in theory is extremely positively impacted by the stablecoin stuff and all the market structure bill developments that are likely to be implemented soon, that's down 35%. So the trillion-dollar question right now is, have we seen the peak of this cycle? Is that what we've seen since October? Or is this just a normal bull market correction? And I'd say 2026 really does seem to be a make or break year for crypto. Obviously, if markets overall tank, then there's no reason to think crypto is going to avoid that. But barring that, crypto needs to recover. And a correlation breakdown of a few months or a few quarters is fine. A correlation breakdown that lasts over a year is not okay. And so Bitcoin especially, but also just crypto overall generally needs to put up or shut up. So again, I'd say
Kevin, can I
either,
ask
yeah,
Barron's had a good article. I just started reading it before we came on. So they were talking about the crypto treasury companies, obviously the biggest one being Strategy.
Yeah.
And so the way it worked, and correct me if I'm wrong, because I'm just starting to understand this. I think I understand it. So when Strategy is trading at a premium to the coin, you have investors coming in and buying it because they know when they buy it or when they issue new stock, they're going to buy more Bitcoin. It becomes this kind of is virtuous cycle, I guess.
Hmm.
And now that that Strategy, let's say, is trading at not much of a premium, or I don't know if is it trading at is it trading on par with Bitcoin? Because they were basically saying that that's that fundamental was also was that a big move for Bitcoin to go up, and now without it, is Bitcoin kind of little in treading water until that takes place again?
Strategy was the most aggressive buyer. The right now it's basically trading at the value of its Bitcoin, so it's not trading at a premium anymore. But when we first started talking about this a little over a month ago, month and a half ago, it was trading at about a 20% premium. And now it's at par, effectively. So it's still buying a little bit. The way the flywheel worked is that when it was trading at a premium to the value of its Bitcoin, then what Strategy was doing is issuing and selling shares into the market, and then taking that money and buying Bitcoin with it. And so that was acting as a support for the Bitcoin price. And that buying has stopped. The other crypto treasury companies are basically not buying much anymore, which, yes, when they're not buying, that takes away one of the supports, but the sovereign wealth funds are still buying, the endowments are still buying. And that should be enough to outweigh the fact that Strategy is no longer active in the market. But and again, this is a global asset. It's the market cap of Bitcoin is about a little under $1.8 trillion right now. So when people say, well, the Strategy isn't buying, therefore that's why the price of it's, I think that's more looking for an excuse or an explanation. One thing that, as we know in Wall Street, everyone's sitting on a desk and you got to talk to clients, you got to tell them something. So you got to figure out some story to tell people,
China
even if
wasn't buying
it's,
last night.
yeah, exactly. Exactly. That type of nonsense.
I used to
So,
say more sellers than buyers.
yeah. So, but in the fuller, bigger scheme of things, the bullish narrative is that this institutional buying, and this is something that I really do believe based on, the previous experience I had in emerging markets, where, when you get the institutionalization of a market, when it goes from being something niche to something owned by the big institutional players, that really sends prices very, very high. And it happens over a period of a few years. So either that's going to happen, and the fourth quarter correction is just a correction, or if it doesn't happen, then people are going to start to wonder, maybe crypto's a busted flush. And so I think that's what that's what we're going to see. I certainly hope it's a bull market correction and not more than that. Otherwise, this time next year, I'll be a greeter at Walmart or something. And I don't want to see that future.
So, Kevin, I'm just thinking out loud. The all these things you lay out, right? Like you said,
Mhm.
you would have thought that it'd be 150,000 Bitcoin, right?
Yeah,
Is there an easy mechanism for market players to short it? In other
sure.
words,
You could short the ETF, and
yeah, that's
there
where,
are options that trade on the ETF.
so those
So
are liquid enough and you don't have to
yeah,
worry about
yeah, they're
covering.
very liquid. Yeah.
So wouldn't you say that there's somebody's out there who are pretty short Bitcoin and the others right now, no?
Um, there's nothing material that shows that. I mean,
Okay.
one thing that has happened in the second half of the year is because the way that the blockchain works is you can see a record of every transaction that
Okay.
occurs. And you can also trace the history of every single Bitcoin that exists. And so you can also see, for example, when was the last time this Bitcoin moved from one wallet to another?
Hmm.
And so by that you can see for the what are called the whales, the big holders of Bitcoin who've owned it since 2010, 2011, 2012, when it was trading at, $100 or a couple $100. Some of those people own 10,000 Bitcoin, 5,000 Bitcoin, and
Mm.
some of them have not sold in 10 years, 12
And you can
years,
tell.
15 years.
Yeah.
And you can see it. And in the second half of this year, there was quite a lot of selling by those whales. I mean, you could see coins that had not moved in over a decade were being transferred onto exchanges and then sold.
Mm.
And so that accounts for, like, okay, yes, that puts some supply pressure in the market, but that's a market. That's a financial market. You got buyers, you got sellers. And the question is, shouldn't these institutional investors who are just coming into the market, the narrative again is that there's going to be so much buying from them that it doesn't matter what the whales do.
Mm.
And for the last 3 months, at least, that's not been the case. So we'll see how that unfolds in 2026.
Yeah, for institutional trading, I mean, like when you're talking about there's visibility, so you can get a good idea that the market is overly short or not.
Yeah, and I don't think it is. I've seen
Okay.
no indication of that. One thing that historically, there's been a lot of levered long positions in the market, and you can track those as well through using something called the futures funding rate. And that's shown that the leverage that used to be in the market has basically left the market. And there's not that much leverage there.
Mm.
Now, that for a bull, that can be a good thing because the narrative around that is if and when the bull market starts to pick up again, then in every previous bull market, you've seen a lot of the crypto dedicated investors who have quite a high risk tolerance will lever up their positions, and that really pushes the market up. That hasn't happened, and there's what you can see is there's a lot of potential firepower to pile in if and when the market recovers. But until then, we're it's December 30th, and Bitcoin's at 89,000. And based on the fundamentals that we talked about, I would not have predicted that at all.
Mm.
Just to add
Last question. Oh, sorry, Richard, go ahead.
yeah, another adding of 2 cents or 87,000 cents. I look at technicals, and this is for another time, but I look at a lot of people look at the moving averages and all that charts and you can use it for anything. I will say this: I love it's almost like a sideways V, whereby you've seen a big drawdown in some product, and then it's stabilized, right? And then those lines converge, and when those lines converge in those certain moving average situations, that's a big, big, big buy signal for me. So I'm watching it pretty closely, and I'm starting to get bullish. Not quite yet, but I think something good is going to happen soon. Just because
I like it.
You can talk about supply, you can talk about who buys, who sells, who is it in weak hands, is it in strong hands. What never lies is the price. So when you're moving averages, the price is the price, right? So like, okay, it's at 89,000 and it doesn't look great that it was at 126 or whatever, but it's not at 80. You know what I mean? Like, so there is some sort of backstop. It looks to be some sort of backstop. We're not quite there yet, based on my chart watching, but I'm getting optimistic.
Last question about the crypto is now what's happening in silver. Obviously, the silver market's gone bonkers. Do you think that's a lot of frustrated crypto retail flow that they're not getting their action in crypto, so they just pile? Because it feels almost like a FOMO, fear of missing out event and the weak hands are jumping in now. It feels
It could be a lot of the crypto people I know also look at that market, not just silver, but silver, gold, platinum, palladium. They play around in those markets as well, and some of them also, before gold and silver took off, they were playing around in the AI space. And so, yes, the fact that those have been more exciting, more interesting markets has definitely taken some of the attention and some of the money away from crypto. But I broken record being broken again. If Abu Dhabi keeps buying, if the endowments keep buying, it shouldn't matter. And on a short time frame, again, weeks, months, even quarters, yeah, that stuff has an impact. But over a year or more, it really, I mean, if the narrative is still sound, that shouldn't matter.
Hmm. So maybe short silver versus crypto.
Right.
Yeah, it's interesting. But I was kind of looking at this again because I remember my dad telling me in the last silver bull market in the late 70s, 78 into 80, when the Hunt brothers tried to corner the silver market. People were selling their silverware, to brokers because the value of their family silverware just went through the roof. And in 1980, there was actually more silver supplied by the melt market, by basically recycled silver, than there was mined from silver mines that year. And that was the year, when things peaked and went down. And so, yeah, maybe we'll see something like that again. So if your parents, have any silver somewhere in the house, and maybe they have a little dementia too, you might want to, pull the silverware out next time.
We may have to edit that. We may have to edit
grandma.
that. All right, Richie, how about the market? How about that? How about stocks?
Well, it's the feast or famine again. It's been kind of that way for the last 3 years, right? Like, I remember playing. Oh, and I should remind everybody too. Barron's has a nifty quiz, end of year quiz, to project what's going to be the case in December 31st, 2026. It's free to join, and it's like 17 or 18 questions. And I always play it, and I was somewhat even, like not bullish, not bearish on the markets in general this year. So I'm not going to win, because whoever took stocks up 20% again, they won. The year before, I was pretty good. Like, I was pretty good, figuring that things would continue to roll. But I'm always a value guy, right? Value stocks. So for those who don't look at the markets all day and every day, value stocks are what might be called like more boring, right? They just kind of chug along, and they've been chugging along forever. And most people these days see the big returns on the Mag 7, and they're like, wow, that's what I need. So it's basically been a story for fund managers and the like. If you don't have NVIDIA, if you don't have, Microsoft, if you don't have the Magnificent Seven in your portfolio, you're probably not beating the market, and you're probably doing pretty crappy. So basically 7 stocks have made 40% of the gains in the S&P 500, and you got 493 that are just kind of treading water or worse. Some of them are down a lot, like a lot of
but making lots of money.
Right. That's what I'm saying. Like, so it's like the food businesses and stuff like that like Conagra, right? I looked at their chart the other day. I mean, they make so many different products that everybody has, and that stock can't get out of its own way. It's just down and down and down. And as a value guy, I look at these things. I want to buy these things at some point, but I don't want to step in front of a freight train that's going downhill. So, and with the valuations of a lot of these tech stocks, I'm not going to be buying. And a lot of people don't look at PE or whatever. They just say, hey, man, Waymo has driverless cars, and that's good, and that's going to work out. AI, that's a wonderful thing, dude. Look, they're making all these data centers, and everything's going to work out great. And if I hear another person say this time is different than the .com, I'm going to take action. Like I see all these different, like they talk about. So the good argument I heard that seems great is how in the .com era. So this is 1999, 2000, when the NASDAQ dropped 50%. 50% for those of you who don't ever see a bear market. 50%. It took them 8 years to get back, right? They said the argument is it was weak hands, right? It was the weaker groups. You had pets.com and stuff like that they needed to rely on the capital markets to get their funding to drive their buses and do their things, and they still didn't make any money, and then the music stopped, right? Wall Street stopped lending money, things went haywire, and boom, boom. The argument for the bulls is these are like deep pocket guys that are playing in these markets now, right? Deep pocket, they got money. It's very different than what the .com was, right? That's their argument. But the magnitude, right? I don't care how deep you are. Like you've seen, I mean, if you're watching the markets, right? Oracle, right? It went up 35% that one day, right? 35% when they made the deal with OpenAI. It's given all that back, right?
It's 20% lower, I think.
Yes. And it's like
from the day before it went up 35%.
Yeah. And it's like, okay, they got money. They've been around a long time, but somebody's sitting there saying, man, that's a lot of money. That's a big bet. That's a big bet. So this is what's going on now, right? So the bull market case for stocks, though, could be where in 26, where the breadth of the market changes. So and that's happened over the last couple of weeks, 3 weeks. We've seen all-time highs in S&P 500, NASDAQ, guys like that, the Dow. And you still haven't had a great AI situation in the last 3 weeks. So that tells you that people are moving into like boring financials, boring energy, boring, right? Consumer staples. So that's a really good thing. But I will say that in my Barron's quiz this year, I just took it and I submitted it. I was pretty negative because I just don't like because the cycle of a midterm election in the U.S. is usually the worst year for a presidency in terms of the markets, right? Because there's a lot of uncertainty. Everybody's scared. Polls will show this, that. Are we going to have change? Are we going to have nothing? Is the current party going to stay in power? And that doesn't get decided till November, right? So like you got all this flux, and that's the worst thing ever for Wall Street, right? Is uncertainty. They don't want to see that. And God forbid something happens in November that doesn't make the markets happy. Then we're in Tankville. Like it just so. Yeah, I'm not bearish, but I'm not thinking. I think it's hard to post 20% returns in the equity markets every year, and we've done it for 3 years straight. It doesn't often happen 4 years, so I would be cautious. But congratulations to all you who have cleaned up this year, last year, and the year before. I think it's a wonderful thing that you did that. But I would be with.
So your money might be better put to work in sports gambling.
Yes,
prediction markets.
That's the. Well, I was going to say with Kalshi now in the prediction markets, maybe you'll be lessening the volatility of the November elections because which is probably they're a pretty great predictor, right?
Right. Well, the argument there is, people can talk whatever they want in terms of who's going to win and what this poll says, what that poll says, but this is real money, right?
Put your money down, right?
Yeah. You think so and so's going to win? Put your money down. And if they do, then, the conviction is right. That's why these markets, these prediction markets have actually been better than the experts who have been pollsters for years and years, right? They think they have, and the polling is very difficult these days, with the internet and stuff, like you don't know who that person is that's answering if they answer online. People call, hi, I'm from this and this, and they'll make up stuff on the phone now, so it's not as reliable as it once was, I don't think. Whereas the money is always reliable. Like who's in on it.
That was the interesting story. You remember the French guy who made a big bet on Trump before the election
Right,
last year.
right,
And before the election, smart people were saying that, they're trying to paint the tape.
right.
This is Trump leaning billionaires that are trying to manipulate the election by, betting more on Trump than is justifiable by the fundamentals. And it
Right.
turned out afterwards, this French guy gave an interview and he said exactly what he did. And he did, I'll forget or I'll get the term a little bit wrong, but it was something like circular polling. And it's basically not asking people who they're voting for, but asking people who they think their neighbors are going to vote for,
Yeah.
and that those were more, it turned out to be much more accurate because those polls in the swing states showed Trump with a clear lead. And so he explains that this is why I bet so much money, because of this. And so, yeah, to your point about the polling being broken, here was a guy who had a financial incentive to improve on the polling, and he did. And,
Right.
beat the experts and at the traditional polling and news media.
Yep. And, you know, like one of my old mentors back in the day, you'd talk about like, hey, we're not going to make that much money on this trade. We're trying, blah, blah, blah. But if we do it here, we'll make a little bit. We got to put a little risk at hand, but we might make it. And he would say, Richie, grab a $20 bill. And I go, okay. He goes, see that garbage can right there? Throw it in there. When was the last time you did that? Never. Would you ever do that? No. Okay. So let's go on. So when you have people putting their money down, I don't think they're doing it because they, think they're going to lose or
Yeah.
And that's another good point too. So I always look at the insider buying on a weekly basis, like Barron's and other places will show like the biggest weekly insider buying, insiders being like board members, CEOs, senior execs at certain companies. And that's the one thing that you can always count on. Same thing with the $20 bill in the garbage. There are many reasons. So other people will look at the sales. So, oh my God, the CEO of XYZ just sold a bunch of shares. That thing's going to tank, dude. And it could be nothing. It could be he's buying a yacht, right? He has to pay taxes on a big sale he made on a house, whatever. It could be myriad of reasons, right? There's only one reason people buy. The insiders buy. One, it's going up in their minds. And that's usually a good tell. And then another good breakdown is just the aggregate in insider buying versus selling. And when you see an aggregate of much more insider buying, that's a pretty clear bullish sign. And we're still above. Like there is still more insider buying than there is selling out there. So signs do point pretty good. And if the Fed keeps on this rate cutting situation, that's always a good sign for stocks. That's one of my pet peeves for 26, though. I wonder if they're really going to cut, as much as people say.
Right. Yeah. Right now, I think the market still, if you look at like what we Fed fund futures, overnight index swaps, OIS, which I know is Greek, but those are the things that we use to figure out what the market feels the probabilities are, what the Fed's going to do. And what's interesting is like the market is much more on side now than it was like coming into 2025 or even 24. Everybody was expecting a cut almost every meeting.
Right. There was like people were like predicting like 6 cuts a year.
And in my world, mortgages, like there's certain mortgage derivatives that do extremely well when the Fed cuts. And guys were piling into that stuff. I mean, billions and billions of it. And a lot of it was based on the fact they thought the Fed was going 6 times because there's a big leverage in the structures. And they got blown out of the water. I mean, I think we got 3 this year. In other words, now the market there's not many guys are calling for, a 2% funds rate, by the end of the year. So the market is kind of on sides with the Fed. I think the Fed, The last dot plot showed the aggregate, the median was one cut for the year.
Right.
But the market's two, so it's pretty. It hasn't been this way for a while, where the market and the Fed are both kind of in agreement, which means they'll probably have to go 6 times. All right, good stuff. Quickly, I just wanted to go through, you guys did the good and the bad. I just always do the bad. So I've been writing a lot on Matt's racket about a lot about private equity. And I think I'm going to finish up the year with a great story about how it's not all private equity, because essentially there's one private equity firm that was called American Industrial Partners. And what these guys have done is, private equity loves essential services, right? They love municipal and local essential services because it's, to some degree, it's hostage, and it's recession proof. I mean, you need an ambulance, or you need a fire engine, or you need emergency medical care. No matter whether the stock market's going up, down, the economy's doing better or worse, you need that. Funds are appropriated for that. So there's a steady cash flow coming in. It's recession proof. A lot of the businesses, the private businesses that deal with, with regards to like ambulatory care, about 34% of local, state, and municipal EMT and ambulance care is private. It's 34% private, and the rest is funded by the state or the municipality or the town. So you've got this dependable cash flow that's in there. And the operative word is, as Richie and I have talked a lot of times, when you need something, smart guys love selling a product that people need. So what has happened is, in the last few years, this one private equity fund called American Industrial Partners rolled up. There were about 12 or 13 companies around the country that created fire trucks, engines, pumper trucks, hook ladder trucks, all that, which are very expensive and a big deal. And what these guys did, AIP, is they rolled up about 8 of them, and they created now a public company called REV, R-E-V. And what's interesting is this, and as they've been doing this, and the other 2 players are Oshkosh and Rosenbauer. Rosenbauer is an Austrian firm. Now you have 3 companies that control 70 to 80% of fire engine production. And what you'd expect to happen has happened. The price of these trucks, which already are very expensive, like I think a pumper truck would cost, like in 2017-18, was about $650,000. The same truck now is double the price. And then when you get to the really expensive ones, a $1 million truck is now a $2.5 to $3 million truck. And the delivery times used to be 1 year, 2 years. Now they're 4 years, 4.5 years. They have floating prices where, the town needs that truck, and they contract for the truck, and the truck is going to be delivered to them in 3 years. Well, guess what? The price could go up. And if the price goes up, the manufacturer has pricing power. So, and now that they're completely a hostage, they need that truck. They've already appropriated the money. Now they got to go find more money. So predictably, what's happening is there's been some really terrible incidents in Camden, New Jersey last year. We talk about, Camden's one of the poorest cities in the country, and they're using, and everyone's doing this now. They're using trucks that are 25, 30 years old. The service life of these trucks, this equipment, is about 15 years. And in Camden, there was a terrible fire, and the pumper truck arrived, and it broke 3 times. They couldn't put the fire out, and a gentleman died in the fire due to the fact that they were trying to use this truck that was 30 years old. And then I read, so I didn't realize, but there's right now a few antitrust suits going on. They're suing these guys. Different municipalities are suing them for what's happening here. But just some of the lowlights here. So when the Palisades in California burned last year, 183 trucks of the LA Fire Department were reportedly out of service again because they're way past their service life. In Chicago, well, there was a funny thing and a couple of funny things in a black comedy sort of way. One was there was in a firehouse in Chicago. They had a mock 30th birthday for one of their one of the ladder trucks with a cake and everything, you know. But I mean, literally, there's one where the brakes of the truck failed, and this was again a way past service level service time truck, and the driver had a choice of either driving directly into traffic. I think the other way was a school, and he chose option C, which is he went right into a church. How he made these decisions that quickly, but it wasn't Sunday, so I guess he thought no one was in the church. Nobody was included. But in Boston, I mean, there's just a litany of this going on, and again, it's just that it's. But the thing is that from an investor standpoint, it was an unbelievably great trade. They went in, they rolled up. That's one of the strategies. You roll up, you buy the smaller guy, and eventually the last two smaller guys have to sell, right? Because now you're nothing, right? Now you got this big private equity firm and these six firms that have gotten together. It's join or die time, right? So those guys join up. Now you've got scale, and the other two guys are out there, and the antitrust suits are going to try to prove that the three of them are colluding and being anti-competitive.
So the increase in prices of these trucks, is that just margin expansion?
Well, yes, that's one of the things is that if you go to their earnings, and I'm not making light of United Healthcare, but the situation where Luigi, I can't remember, murdered the CEO of one of the divisions of United Health, but it's similar where across the nation, fire rescue is things like this are happening. They can't do their job, and the guys that are selling the trucks blow out earnings. Like Rev, the stock price for Rev was up 63% this year so far. 63% of the Oshkosh is about 40%. And yes, they talk about when they get on their call, they talk about margin expansion. It's not that I'm sure there's some new technology, right? But the price in these guys don't double or triple. And of course, the wait times are. I mean, first of all, I'm sure they've slowed production down because that's another thing you do. But also, they've closed. When Rev came in, they bought these 8 companies, and slowly but surely they're closing plants and laying off workers, closing plants because that's the efficiency. And Rev was able to come out of this. They sold a portion. I'm sorry, AIP did an IPO on a portion of their holdings. And they made about $275 million. And they've now, I think by 2024, they've completely sold everything is now they're out. So the stock is, I guess, 100%, public now.
And Ford or GM can't, jump in and repurpose one of their production lines, or is just the market not that big?
I think it's the market. It's very specialized. There's probably a huge. Yeah, it's everything that you'd want if you're a limited partner in this thing. That's exactly what you want. Hey, we're going to do this, and when we go to sell, we're going to be selling into an oligopoly. That's basically what we're selling, a ticket to be an oligopoly that makes a very high margin product to people who have to have it. Done. So. I'm writing about this now, and it's such an unwieldy. It's a lot of a story. So I'm trying to get it, where I don't go too far one way or the other, but it has everything of what the problem is with kind of unfettered private equity, private credit, and I shouldn't even blame private because the other two companies were not owned by private equity, were never owned by private equity. I don't want to be a communist, but it's kind of unfettered capitalism. This is what a corporation is going to do, and that's why antitrust laws are created. But who knows? And on that happy note,
yeah. Well, what we've got. Speaking of happy, there's some football games coming up.
Yes,
big ones.
Yeah.
And luckily for all of you, we have Mr. Richie Bennett is not only a great stock picker, but back in the day, Rich, should we talk about Big D for a little bit?
Yeah, Big D was big mint, massive handicapper to the stars. And when we did our blog, which was um, written articles back in, geez, many years ago, Big D would come out with his picks of the week. Sometimes 3 college, usually 3 college, 3 NFL. So this week, we're going to bring Big D back, and we'll leave the NFL games alone because there's not that many. There's a couple that are very important, but not that many. But we'll save our powder for the playoffs, which are coming up. But speaking of playoffs, the college football playoffs are tomorrow, Wednesday, the 31st, 1 game, and Thursday, it's January 1, and there's 4 games, and I'm going to give you 3. So these are all point spread picks. So I'm not so convinced on who's going to win all these games that I want to bet that. But let's start with the first game, which is Miami versus Ohio State. They put that point total very low. Point total being the over and under of how many total points will be scored in the game. 40.5. So people get excited, right? Because they're like, that's Ohio State, dude. They have great guys. That quarterback for Miami was like a big star at Georgia, and he got hurt a little bit, but he's having a good season now. And I'm going to go with the under 40.5, because what people don't realize is both of those defenses are tremendous. Ohio State's got probably the best defense in the country. So I could see that being low scoring. Then we go to Thursday, where the Texas Tech Red Raiders and the Oregon Ducks go at it. Oregon gets a lot of hype. They're very good offensively. This quarterback may be one of the top picks in the draft more next spring. But Texas Tech, again, great defense, and they seem to just win. They're 12-1, and they win against the spread. And for some reason, underdogs. I think the wrong team is favored here. I'm going with the Texas Tech Red Raiders plus 2.5. And then finally, we have an old unwritten rule, but it's written a lot with the Big D fans. Never, ever, ever in a football game take the favorite minus 6 points. You know why? Because everybody sits there and goes, oh, they got to win by a touchdown. What's that? That's nothing. But they're not favored by a touchdown. They're favored by 6 because they want you to bet that game because you're going to play that the favorite's going to win by a TD. Well, we got Georgia and Ole Miss. And if those of you who've been following college football, there's been a lot of controversy around the Ole Miss Rebels because their coach left abruptly. But as they showed last week, some of the guys have stayed, some of the coaches. Most importantly, the offensive coordinator, Charlie Weis Jr. Charlie Weis Sr. was Tom Brady's first quarterback coach. So they did splendidly the other day against Tulane. Ole Miss did. And Georgia's obviously got a lot of hype. But I'm going to take Ole Miss plus 6. Again, I don't know if they can win, but I could see that game going down to a field goal. So there we have it. Under in the Ohio State game, Texas Tech plus 2.5, and Ole Miss plus 6.
I love it. Three semi-unconventional picks.
Yeah, we like to do that.
We call them locks back then.
Yes. Five-star hammer locks.
All right, guys. Good stuff. Have a happy new year, and we'll talk soon.
Happy New Year.
Happy New Year, everyone.